Welcome everyone. Today I have Steve, the financial advisor, and Helena, a Medicare broker, here with me to discuss Roth IRA distributions and tax avoidance strategies on Social Security and Medicare. Now, this is under the Secure Act 2.0. So Steve, start us off by explaining the Secure Act 2.0. I'm assuming there had to be a Secure Act 1.0 at one time, right?
Yes, there was a Secure Act 1.0 in 2019, and then they updated it with a lot of different things in 2023. And one of the things that they did relative to this conversation today is that there are Roth IRAs, or Roth IRA 401ks that are sponsored by employers.
Yeah.
And so if you have a traditional Roth, you don't have to take, there's no point where you have to start taking money out, but with the employer-sponsored plans, until this update, you had to start taking money out.
Ah, okay.
So that was one of the differences. But the nice thing is, since Roth IRAs are tax-free when you take the money out, the longer you can let that money grow, the more you can take out tax-free. So it's kind of a win-win for everybody.
Sweet. That's great information, Steve. Now, Helena, explain to us how Roth IRA distributions impact Social Security and Medicare premiums, especially in the context of tax avoidance.
Of course, when it comes to Medicare, your taxable income from 2 years ago can affect your Part B and your Part D Medicare premiums. What happens is the higher income results in the higher premiums through IRMAA, which is the income-related monthly adjustment amount. So the Roth IRAs can be a strategic tool in this context. Since you've already paid tax on the money that went into the Roth, the withdrawals are not included in your taxable income, so they don't increase your adjusted gross income. This can help you avoid crossing the income thresholds that would trigger the higher Medicare premiums, and it also may prevent your Social Security benefits from being taxed at higher rates.
Cool.
Yay!
Right.
Yeah. No, from 50 to 85%.
Yeah.
No, big
So,
deal.
Steve, how does one use a Roth IRA distribution to optimize these benefits?
Well, the key thing with the Roth is that the distributions are not taxable, they're not included in your taxable income, and they won't be counted to potentially increase your premiums on your Medicare Part D, and how much your Social Security income is taxed. So timing of those withdrawals can be really critical. Also, since they eliminated the required distributions from your Roth accounts and employer-sponsored plans, you have more control over the timing about when you take the money out, let it grow longer, with more money to take out later when you need it.
Okay. Helena, are there any other considerations retirees should keep in mind when using a Roth IRA distribution to manage some Medicare premiums?
Oh, I totally agree with Steve. It's essential to consider the timing of your withdrawals and how they align with your overall retirement income strategy. For instance, coordinating your Roth IRA withdrawals with other income sources like pensions or Social Security can help smooth out your taxable income over time. And also, while Roth IRA distributions themselves are not taxable, other factors like capital gains from taxable accounts can affect your AGI, which is your adjusted gross income. Working with a financial advisor and a Medicare specialist can help retirees create a comprehensive plan that takes all the elements into account.
Sounds like the Roth IRA distributions are a powerful tool for tax avoidance and managing Medicare premiums, but it does require some careful planning. Steve, Helena, final thoughts?
Yeah, no, I agree with just what you said, Bob. On careful planning and strategic planning and early planning. We want to do this as soon as possible. You don't want to be more than about 10 years out from retirement. You start putting this in place, you get it all set up, and that way you've got a lot more flexibility in your retirement and your expenses and your taxes.
Okay.
Yeah, I agree. And then I'd like to add that if you were in a higher income bracket 2 years ago than you are now, you can lower your Medicare Part B and D premiums by filing Form SSA 44.
So you're not stuck with that if you drop your income.
It's not fair, man. So
you get one windfall and you're stuck for life.
No, you're not stuck for life.
That's awesome.
So you can just, you get a do-over there, so you can download that form from the IRS website, or you can get it easier from my website, getgreatplans.com.
Perfect. Awesome.
I have a question for Bob.
Yeah.
Sure.
What's the difference between tax avoidance and tax evasion?
Very good. Every American should avoid paying and try to pay as little tax as humanly possible, legally. But evading your taxes, well, the difference between the two is about 20%.